Ladies and gentlemen, good evening. This is Christopher Aaron. It is a hot May evening here in the northeastern corner of the United States. What is not hot is the US dollar. The US dollar has been breaking down recently. We will put this in perspective. If you're investing in the precious metals, or the rest of the commodity complex for that matter, this is going to be one of the most significant drivers for your success over the next several years. So this bears your attention. I would recommend that if there's anyone who is not paying attention to what's happening in the dollar right now, that you forward this video to them, or maybe the last chart that you're going to see in this video. Let's take a look. So what is happening? Why is this happening? We have this brewing from political tensions here in the United States. President Trump firing FBI Director James Comey over the last week after some of the handling of the drama with the email shenanigans that are going on. And then after the firing of Comey, we now have the former FBI Director Robert Mueller being appointed by Congress to lead the special investigation into Trump's handling of information related to Russia. Now, if you ask me, this is all a circus act. I don't believe that there is a whole lot of truth to many of the allegations that are going on right now. But my belief is really not the most important thing. What's important is for us to look at how the market is interpreting this series of events. So, whereas last fall when Trump was elected, the market was convinced that everything was rosy for the United States economy, that Trump was going to usher in a new era of prosperity, and we saw the US dollar and the US stock market surge after the Trump victory. We are now seeing the exact opposite as some sort of reality set point checks in here. The Dow dropping 372 points today alone. This was the largest drop since last September, so a fairly significant drop. And more importantly, we are seeing the US dollar basically move in lockstep with the stock market. You can see this here if you look at the intraday action. This is from yesterday, and we're going through today. Look at where the drops are happening overnight. We saw a big move down in the dollar, and conversely, a large move up in gold, US bonds, gold miners, giving back some of the gains from yesterday, but still higher for this week so far in commodities. So this is so important. This is what the critical thing to pay attention to if you are a commodities or precious metals investor, is to watch this relationship between the S&P 500 and the US dollar moving together. Why? Because if we flash back here to the crash of 2008, 2009, and we look at the top at the US stock market, the S&P 500, and the US dollar on the bottom, look at how the two moved almost in a mirror image to one another. As the stock market was crashing, this was the biggest part of the crash in the fall of 2008, over a 50% crash, all said and done. Look at the inverse action, the US dollar getting the primary safe haven bid. And so what happened here is, in the worst of the crash, I remember because I was watching the markets on a daily basis during this time, and as the US stock market was falling and therefore the dollar was rising, gold was actually following the stock market lower and falling. Silver was falling also. So what we have seen here over the last couple of days is the opposite of this relationship. US stock market and US dollar falling in tandem. If this continues, consider this. The US dollar and the US stock market are both at multi-decade highs at the exact same time. Well, let's say the US stock market is at an all-time high and the US dollar is at a multi-decade high. So, is it conceivable that both of these markets may be synchronized at this point at multi-decade highs, and that the last assets standing this time would not be the US dollar, as in the crash of 2008, but instead would be gold to receive the safety haven bid. We certainly have seen that over the last couple of days. Here is gold. There was a nice pop higher here in the overnight hours in Australia that was telling me last night. I was watching things. It's telling me today was going to be a pretty big day. Gold has exceeded the lower range of my target. I was expecting to move up to 1240. We're hitting the upper range. I was saying 1260. I would expect there to be a little bit of a consolidation here for the next couple of days. And then I'm going to reassess. And I'll tell you, gold has broken some short-term resistance trend lines that I've been looking at and is acting stronger than I even thought on this surge here. So there's nothing to say. I'm not going to bring up the specific gold chart. I want to focus on the dollar here in a moment. There's nothing to say that gold couldn't surprise even me here and break that pennant consolidation that we've been talking about over the last several months. There's nothing saying that it could not do that earlier than even I was anticipating. It is acting stronger than I thought it would here over the last few days. Let's watch for some consolidation here. Silver moving higher too, making a nominal new high today and closing back within the range for yesterday. Silver has impressed me that it has overcome that broken trend line from last week that we were looking at that was right around 1650. So it has overcome that. I would like to see that held for the rest of the week. And then we can talk about that being a false breakdown on the silver market. And we can talk about maybe a springboard effect in the opposite direction. Let's see that 1650 level hold here for silver throughout the rest of the week. This was the big thing that I want to bring up. This is the US dollar index. And if you are new to studying these charts here with us, know that all the colors that we're looking at here, these all have meanings on the system that I am using. Use a lot of different types of trend lines, Fibonacci lines. I will occasionally put up horizontal support and resistance lines, as well as callouts that are derived based on calculations, usually amplitude calculations based on a preceding move where the next move would be. So this is the US dollar index over the last 18 months. We're going to back this out in a second, but I just wanted to show you guys how important this was. We have been following this trend line here for the last 10 months. A couple of weeks ago, I sent out alert to all of my subscribers, and when we saw this breakdown here, and I said, guys, this is what we have been waiting for. I have been anticipating this, but I was waiting for this line to break. This is an important break here. Sure enough, we got the retest of this, and boom, moving strongly in the reverse direction, failing to overcome it now. Now, the more important aspect of this here, let's back this out. We're now looking at the same US dollar index. This is over the course of the last 3 years now. So the important thing to remember here is this was the strongest surge of the dollar's advance. The dollar has been rising for the last 9 years. This was the strongest part of the advance. 9 years, then you had this advance, and then the dollar consolidated here for 2 years. And when you have a market that consolidates for 2 years, it's telling you there's indecision. That's what a consolidation inherently is. Now, when you are consolidating and you break higher from that consolidation after a 9-year advance, which is what has happened here with the US dollar, and this breakout fails to hold and it reverses strongly back in the other direction, this is a false breakout. And there are false breakouts, and then there are serious false breakouts. And ladies and gentlemen, I'm telling you, this is a serious false breakout in the US dollar. Coming after 9 years of gains, to see a false move like this, poking its head above this 100.5 level, and then failing to hold it. Now, if you go back to the video that I made on February 1st, it's in the archives. I keep all the archives up. If you go back to the video that I made on February 1st, when we had this test right here, this is where my red flag started to go off from a technical analyst perspective. And I started to say something is not right here with the way the dollar is acting. This low was actually nominally lower than this low. I said something is not right. And I started to suspect that we were perhaps forming a head and shoulders top after a false breakout from a 9-year high. And a lot of people said that's crazy. The dollar is in a bull market. The dollar is moving higher. I said, guys, based on my analysis, this doesn't look good right now. And then we watched, and then it looked like, oh, maybe I was wrong with that call. We saw this bounce here. We saw another new low. I said, this really is not looking good. Of course, this bounced right here at the trend line. So it held. We saw another bounce. And then a consolidation here, another bounce. And then boom. So this formation here that we're seeing, this false breakout after a multi-year high, and the dollar position, you can see this. It almost looks like it's rolling over the edge, and it's looking like it's about to tumble off the face of a cliff right now. That is, of course, a very non-scientific technical term that I'm using to describe the visual analysis of the momentum here that is picking up to the downside in the dollar. There is no way you can paint this as a bullish posture for the US dollar. There was some suspicion that this was going to be a falling wedge here. I didn't think it was, because these lows were not matching up the way a falling wedge should. It was also happening at a relative high. Anyway, so when we take this dollar chart and superimpose it into the largest component of the dollar index, we're looking at the euro US dollar cross pair. The euro is 57% of that dollar index. That entire last chart, if you were to flip it on its head and shrink it down, fits right here in this red call out. And what you'll notice here is that the euro has been forming these almost linear higher lows every 16 years on the dot. And we have just seen, as I said, a false breakout in the dollar. Conversely, a false breakdown in the euro. When was this solidified? Think about it. The Macron victory. Just a few weeks ago. And think about all the hysteria that was being played up by the mainstream media over the last year or 2 years about the breakup of the EU, the disintegration of the euro after Brexit, after the Italian referendum, and the fears over the French election. Everyone was bearish on the euro. And I was saying, guys, I think the euro is forming a long-term bottom. This looks really good from a technical basis right now. We saw that false breakdown in the euro. It's popping back up. The last low of this magnitude in 2000, 2001, the last low of this magnitude corresponded, this shot higher here that you see in the euro versus the dollar, corresponded to the large rise in commodities and gold and silver prices that was seen from 2000 to 2008. So by my analysis, it looks like 16 years later, we are setting up for the next major round of dollar weakness and euro strength, which should correspond with the next round of surges in the precious metals. That doesn't mean it's going to be tomorrow or the next day. I'm talking here from a big picture macro perspective. You need to understand how important these lows that form in the euro, conversely, the highs in the dollar here. Looking at the very short term, once again, back to the dollar index, calling this what looked like just a weak continuation at the time. We're calling this a false breakout from a multi-year move. The dollar, I have an immediate target for the dollar of 95.5, coming back to this region shown by the green arrow. This is based on the amplitude of this surge higher from the resistance zone subtracted from the breakdown point. I do not think this will be it. Why? Because if you study these false breakouts after multi-year highs in different markets, they tend to signal major turning points in the market. They tend to signal times in which a multi-year move in the opposite direction is setting up. So what would I expect? Probably something like continued weakness over the next week or two to 95.5 in the dollar. Some sort of a rebound through this summer. This could correspond with weakness in the precious metals throughout the course of this summer. And then I expect a continuation lower, at least this year, probably to test this support zone around 92. From there, we will take things as they come. I thank you very much for watching. This type of analysis is what goes out to premium subscribers every week in print format. And I wanted to announce that I have had some suggestions that I'm going to begin implementing this in the near future. I don't have the exact date yet. I'm investigating the technology, but I'm going to start a members-only live video stream. I am not ever going to stop these free videos. I'm very thankful for everyone who's been tuning into this channel over the last couple of years. You are my base, and I will continue to make these free videos to show you the important points of what is happening in the metals as we go forward. But I am going to add another bonus for my premium subscribers, which is going to be, it's going to be a live video either quarterly, or eventually I would like to get that to once per month. And this will allow me time to do a full question and answer session. And this will allow me to really get a lot more interactive with some of these videos here. So that will be coming over the next month or so. I also work with individuals. If you do not want to subscribe, if you just have an individual strategy question, or you would like to go over something about the metals that you want an independent perspective on, I'm happy to work with you to try to steer you in the right direction, at least from someone who will not always tell you just buy everything right now. But perhaps there is a reason to wait, or perhaps there is a reason to take a bit more of a diversified strategy. That is some of what I try to do with individuals. So I do thank you for watching this one, and I will see you again this time next week. Have an excellent evening and the rest of your week.